Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Good morning.
Seeing a bit of a bounce in the crypto markets right now. Let's take a look at Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at 38,900 and change. Bitcoin is up about 1.3% over the past 24 hours, and the CoinDesk Ether price ETX index is currently at 2591. ETH is up about 3.6% ahead of that London Hard Fork, and the new DFX CoinDesk's DeFi index is trading at 540. DeFi is up almost 3% for the day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So, top story of the day, what everyone's talking about, it's SEC Chair Gary Gensler, who spoke at the Aspen Security Forum yesterday, and he's agreeing with his predecessor that every ICO is a security, and that essentially the vast majority of crypto tokens may be violating U.S. securities laws, and crypto trading platforms as well may already have securities listed, and that sounds like a bit of a warning shot. Lawrence, is this having a chilling effect at all in the markets?
Well, it's not quite done anything to the markets in that the markets just moved a little bit here and there, a couple of points. But
oh, we have lost Lawrence. We'll go back with Lawrence later on in the show.
United States.
Oh, Emily. Gary Gensler also emphasized that there is a lot of regulatory clarity on how securities laws applies to cryptocurrencies, which leaves a lot of people kind of confused because people in the crypto industry often feel like they're stepping on eggshells in a gray area when dealing with SEC.
Yeah, that was completely my impression. He made it sound like it was completely black and white, what was a security, what was not a security, which has long been very mysterious in the world of cryptocurrencies. So I guess he knows something that we don't. But you know, it's not necessarily a bad thing. I mean, it just depends on how these regulations come into force, because one of the biggest complaints that people have had about the US is that it lacks regulatory clarity. So I guess anything that is moving toward regulatory clarity could be a good thing. It's just the question is, are they going to overshoot? And that's what we don't know yet.
Okay, Lawrence, we have you back, but what were you saying about the markets?
Well, the markets didn't react. I mean, it moved up and down a couple of points here and there, but ultimately they realized that the SEC does want to have an interest, at least, in regulating crypto, or an interest in the sense that that's something that this particular chair wants to do. He's the most knowledgeable person in crypto to run the SEC when it comes to crypto. He obviously taught the course at MIT. So this is somebody who understands the space probably better than I'll say than more than a majority of the people who are at least trading crypto. And he's going to have clearly a more aggressive stance when it comes to regulating not just trading on exchanges, but even the very nature of stablecoins. I mean, he made it very clear that he said they're most likely investment companies, securities.
Yeah, because of his education and knowledge of the blockchain industry, people thought that he would be more crypto friendly, but it appears that he is having a more aggressive stance. In addition to saying that most cryptocurrencies are securities, and we'll get back to Lawrence, hopefully he's on and off. We see you again there. Gensler also, said that stablecoins and decentralized finance was on his radar. Have a listen to a clip we have.
The American public is buying, selling, and lending crypto on trading, lending, and these DeFi platforms. And there's significant gaps in the investor protection. Now, make no mistake, to the extent that there's securities on the platforms under our laws, the platforms have to register unless they meet some exemption. Make no mistake, if it's a lending platform, it's offering securities, it also falls within SEC jurisdiction. Further, these stable coins may be securities and investment companies. To the extent they are, we at the SEC will apply full investor protection under what's called the Investment Company Act and other laws on these products.
All right, joining us now to discuss is Ernst & Young Global Innovation Leader and CoinDesk contributor, Paul Brody. Welcome, Paul. So when you hear Gensler's comments on DeFi, on stablecoins, do you sense a crackdown on the horizon?
It's hard to say. I actually took away really positive message yesterday, right? We have an SEC chairman who understands the space, who is positive on the innovation that's taking place. And I personally think, the blockchain governance ecosystem is too complex and the uncertainty is holding back the market tremendously. Crypto and blockchain are a couple $1 trillion worth of assets. The global securities markets are $100 trillion or more. If we want that 98 other trillion to be put to work in DeFi and on the blockchain ecosystem, then this is a really bullish signal. So I was really thrilled. He really understands what he's talking about. He is incredibly reasonable. I was wondering why people weren't popping the champagne corks yesterday after his remarks.
All
so
right.
Paul, what does the world look like if Gensler gets his way and we get more regulated stablecoins?
If we get more regulated stablecoins and more sort of securities regulation, I believe the world looks a lot better in the sense that all of these blockchain enterprises start to look a little bit like corporations. We have standardized reporting. You can go to Yahoo Finance. Think about how amazing Yahoo Finance is. You can go in, you can read and benchmark and produce charts on all of these things. And they're apples to apples comparisons, complete with really good documentation, disclosure of risk. If we want to invite trillions of dollars of capital in, that's what's going to be required. And so I look forward to a world where blockchain ecosystems have trillions of dollars of capital at their disposal, and they have standardized reporting and regulatory structures that make governance fair, that protect investors. And by the way, the SEC is absolutely right. The vast majority of people are buying these things as investments, and they don't understand what they are buying. And it's not easy to research them because so much of blockchain governance is too complex.
For the record, Paul, of course, CoinDesk has a lot of those tools. Just saying. That's all.
Yeah, and I should say, I'm talking about the legacy stock market, right? What I want to see is more standardization and the kind of things that we can do on CoinDesk, but much more apples to apples. The truth is, complexity in governance models favors insiders. It doesn't favor outsiders, because if you read all these ICO documents, if you read the governance models of these different organizations, the DAOs, they are fair and reasonable. They are in many ways quite transparent, but they're very inconsistent and they're rather complex. And that favors insiders, right? And voter participation in these governance models is actually very low. So if we have more standardization, greater simplification, and we can use the tools on CoinDesk to understand much more about the operating metrics of these organizations, that will be nothing but a huge good for the ecosystem.
So I see what you're saying about regulating stablecoins and how that could be positive for the industry, but there's definitely some lawmakers who I think are just wary of the existence of private stablecoins in general, and they're suggesting that we need a U.S. digital dollar or a central bank digital currency in order to kind of have an official dollar-backed digital currency. Do you think that, do you think that a digital dollar is a good idea, and do you think that it can coexist with stablecoins?
So I think stablecoins are going to be the best mechanisms for delivering a digital dollar. And the reason is that when you sort of peel back the issue around digital dollars, there's kind of three big issues that I don't think people are always fully considering. Number one, if the Fed offers a digital dollar, I'll be honest with you, I'd rather have a digital dollar than a bank dollar, because bank dollars are slightly less valuable. The Fed is the ultimate sort of guarantor. So a digital dollar from the Fed is more valuable, and that means the Fed is in competition with their banking partners. Secondly, there is regulatory complexity associated with this, right? How do we protect people's privacy? How do you manage those banking relationships? And thirdly, and I think this is the one that is really, really important, digital dollars represent systemic technological risk. If you want to have a programmable digital dollar, that means it has to be programmable. That's how it's useful. That's why blockchain dollars are useful and different from other types of electronic dollars. Whenever you ship code, you have the risk of programming flaws. Imagine if there was a programming flaw or a security flaw, not in a dollar or some dollars, but all of them. That is the ultimate digital systemic risk. And if you look at this from the standpoint of a regulator and you're thinking about risk, wouldn't it be safer to have dozens or hundreds of stable coins in different ecosystems? They are bank regulated. They're backed by actual dollars deposited in banks, but they're built on different code bases. They're operating potentially in different blockchains. That looks like a lot more manageable set of risks than a single national digital dollar.
So, Paul, the U.S. Regulation can only go as far as its borders, of course, and maybe then some a little bit. But what happens if Gensler gets his way? He can do some more regulations when it comes to stablecoins and DeFi and other things. What happens overseas, outside the United States? Do these things take off even more because people look offshore and say, "Hey, we can do something and get around it," or do you think that you'll see compliance or at least other regulatory agencies worldwide fall in love or try to come up with some sort of universal standard?
I think there will be cooperation. I do think that regulatory agencies look to each other. The U.S. is not the only place where these types of regulatory discussions are going on. Authorities in other countries around the world are clearly cracking down on securities offerings. They're cracking down on unregistered crypto exchanges. So I don't think that we are either unusually far ahead or unusually far behind everybody else. What is interesting is that in spite of the globalization of this business, something like 90% of all the stablecoin transactions are dollar denominated. And what that tells us is that even though the US, it doesn't have as much regulatory clarity perhaps as some other countries, companies want to operate here, they want to transact in dollars. And I think if we make the rules clear, they will invest the time and energy required to be compliant.
Paul, I'm struggling to figure out how these regulations will apply to the decentralized finance space. So would like to get your thoughts on that, because a lot of these transactions are peer-to-peer and, and they're dealing with these issues in the infrastructure bill going through the Senate right now. Does that make everyone a broker? What kind of enhanced reporting requirements would apply to everyone? Would love to gauge your thoughts on that.
We're trying to figure that out too, but I think I do think there's a couple of things that are starting to become very clear. So the first is, I think we're going to see in the world of crypto a regulatory model that looks not dissimilar to the kind of one that we have on the internet. And what I mean by that is that regulatory rules will be applied to institutions that operate at the edges of the ecosystem, the on and off ramps, and they won't be applied, or it won't be feasible to apply them to things that operate within the decentralized core of the network. And a really good example of this is, think about BitTorrent. BitTorrent is a decentralized peer-to-peer content distribution system that, if you still want to use it, you can go and get a lot of movies and videos without paying for them. There's really no practical way to shut down BitTorrent without shutting down a large chunk of the internet. But cable providers, internet providers, ISPs, others do take some responsibility for kind of the use and transaction volume. We'll see a similar thing. If you think about the on-ramps and the off-ramps, there are crypto exchanges, there are banks, there are others, right? I believe the regulatory rules will be applied when people try to turn their money into digital assets, or take the digital assets and turn them into traditional banking money. And so you'll have to be cognizant of the fact that if you do things improperly on the blockchain, you're going to have trouble when you try to turn that money into regular money, or you try to integrate your bank account. And we will see sort of integration of DeFi and regular finance in this process. So your bank account's going to increasingly look like, hey, I can send money through an ACH transaction. I can send money to an Ethereum wallet address. It's going to be one bank account, and it's going to be one set of reporting that I think banks are going to do to regulators.
So you have said that, this kind of regulatory clarity is good for the crypto industry. That makes a lot of sense. And it seems the market maybe agrees with that, because it's not reacting very negatively to, what Gensler said. But there definitely are things that could go wrong, right? I mean, there's definitely regulatory moves that could have a negative effect on the crypto industry. And I think there is fear of that. What are some of those moves? Like, where are some areas where we should be watching out for, where regulators could maybe go a little bit too far and dampen some of the sentiment that we've seen over the past year?
So the toughest thing to do in a programming environment, and the thing to keep in mind, is that we are running a digital finance ecosystem, and this is a programming environment. So the same kind of decisions that could lead you to a really bad technological outcome are the ones that would lead you to a bad regulatory outcome. And those types of decisions always involve implementing too much complexity. The technology industry is really good at figuring out how to make things sort of minimally complex and most massively scalable. And you've got to do that when you're talking about an industry with trillions of dollars of assets and tens of millions or hundreds of millions of transactions a day. And so the key thing that regulators need to watch for is, are we designing something that's too complex to technically implement at scale? And that's the biggest risk, I think, is I think that people will implement things. Anything that's implementable, that's scalable, will do so. But complexity means risk. It means software bugs. It means scalability issues. And so thoughtful design there is going to be really important.
All right, Paul, we got to wrap it there, but appreciate you coming on. I like your enthusiasm and your positive outlook. Other people in crypto Twitter are a little less positive, but looking forward to seeing how this develops. That was Ernst & Young Global Innovation Leader and CoinDesk contributor Paul Brody. Coming up, checking in on Asia and the crypto markets update with quant trading firm Alameda Research. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 4th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, investors are closely monitoring Ethereum's London upgrade. India launches e-rupee digital payment voucher. And Australia crypto exchange CoinJar partners with MasterCard to offer a crypto card. Let's get you up to speed from Asia to the world. First up, crypto eyes are keenly monitoring Ethereum's London upgrade. The hard fork will implement EIP 1559 and prepare the network for its evolution to Ethereum 2. That's its full transition from a proof-of-work consensus model to proof of stake, which ultimately reduces vast energy consumption. It could also continue to support the upward trend in Ether prices we've been seeing. The hard fork introduces proposals which are set to make the blockchain more user-friendly and more competitively priced by making transaction fees clearer for users. It will also reduce the supply of Ether tokens. One expert told Forecast News that it sets a benchmark for blockchain technology going forward.
Some have dubbed it to say this is the blockchain 2.0 event. If you shrink the supply of Ethereum, you can make blockchain more scalable and more faster technology. And that will be key because in the future, much of this technology is likely to be implemented by central banks as well as global investors.
Emens says prices could be sharply boosted by the London upgrade, comparing it to Bitcoin's halving events, which have triggered eventual bull runs in the past. Meanwhile, India's crypto sector has welcomed the government's launch of its e-rupee. Announced earlier this week, the e-rupee might not be quite what you think it is at first glance. However, it's not a CBDC or an e-wallet, but a prepaid digital payment voucher powered by the country's unified payments interface. And it's not blockchain powered, but the crypto industry in India is still excited by it. According to India's Business Today, crypto exchanges have reacted favorably to the launch, with ZebPay saying that it's a step towards forming a complete digital economy, and WazirX saying it emphasizes the core message of blockchain-based tokens by enabling end-to-end digital transactions. The launch came as discussion over legislation, which could see crypto banned in the country, remains at a standstill in India. On to the markets today. Bitcoin down 2% at a little under $38,000 as of 4 p.m. Hong Kong time at the end of the Asian trading day. The fall follows Bitcoin SV suffering a 51% attack which saw 3 chains being mined simultaneously. A 51% attack is an attack where miners gain over 50% of the hash rate on a proof-of-work blockchain, which right now includes Bitcoin as well as Ethereum in its current version. It is the 5th such attack since June. And in the top 10 for cryptocurrencies, XRP down 1.5%, but Cardano is up 2.5% after Bitpoint announced it will be the first exchange in Japan to list the coin later this month. The country is known for its extremely strict listing rules. And finally, Australia's CoinJar crypto exchange has partnered with MasterCard to launch the country's first crypto spending card. The card is already available via Apple Pay and Google Pay, and it allows customers to select from 30 currencies, including Bitcoin and XRP, at the point of sale, with MasterCard paying the merchant the equivalent amount in Australian dollars. This means the card is accepted anywhere MasterCard is. In a big week for Australia's fintech industry, with this news following payment giant Square's acquisition of the buy now, pay later company Afterpay, CoinJar told Forecast News the only thing holding fintech companies in the country back is its population.
We're actually really quite forward in the way that we engage and create new products in the fintech space. I think we're up there with the UK. I definitely say we're in the top 5 of jurisdictions in the world in terms of new product offerings. But there is only 25 million people here. Launching those products globally it can definitely be our thing.
Michaelides says that means the company is looking to expand its operations in the UK next. The deal follows hot on the heels of Australia's Crypto Spend announcing that it had made a similar partnership with Visa. Their card is due to launch in September. Another way to spend your crypto more seamlessly in the real world. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. Here's a live look at Bitcoin. The CoinDesk Bitcoin price XBX index currently at 38,850. Bitcoin slightly up over 1%. The CoinDesk Ether price ETX index is also up about 3.6%, trading at $25.95, nearing that $3,000 threshold. And the new DFX CoinDesk DeFi index is at 542. DeFi is up almost 4% over the past 24 hours. And joining us now to discuss the crypto markets is Sam Trabucco, co-CEO at quant trading firm Alameda Research. Welcome, Sam. So just quickly want to get your outlook on Bitcoin and the crypto markets. It seems like it is cautiously optimistic.
To some extent, at least super short term, what we've been seeing for the past day and a half now is the market reacting to what it obviously perceived as not great news from what Gensler said, and there's a few other week-long narratives that are going on. But in general, what we've seen from the crypto market is that when it does react to news, it tends really strongly to basically just always overreact and revert pretty quickly. I think that's what we're seeing, for instance, in the past hour or two, with the market just recovering exactly to where it was before it reacted to whatever Gensler said.
Sam, I would love to get your comments.
This is sort of the paradigm.
I'd love to get your comments on Gensler. He talked about trading platforms having to register with SEC and not allow Americans on their platforms if they're not registered, even if they use VPNs or virtual private networks. What were your thoughts?
So I guess to some extent, it makes sense to me that the market wouldn't have reacted very strongly, at least on net. It went down a few percent and it's recovered. And that makes sense to me in the sense that on some level, this wasn't news. And I was surprised that people even cared that much. Just on the level that what do people think the US was going to do exactly? This is what the US, they've made claims like this in the past, various regulatory bodies. And this is also just what they always do, I guess. And so I guess there's some updates about timeline. And I think the biggest update might have been about the outlook for an ETF or whatever. And we saw, for instance, the Grayscale ETF premia did get hit on this more than, for instance, Bitcoin got hit. And that makes sense to me. But yeah, for crypto in the US and globally, I don't think this was really that big of an update.
So my understanding is that you have some opinions about Tether and about some of the backlash toward Tether and USDT. And so I guess like my big question is what are people getting wrong about USDT?
So like people make like claims about Tether all the time that don't tend to be based on like having interacted with the Tether team or used Tether very much. There's like many claims that I've heard of like thrown about Tether. Like for instance, that it's impossible to redeem. I can confirm to people right now that it is not impossible to redeem. I've done it for large size many times, and that's probably the biggest misconception. Like where a stablecoin breaks down, obviously, is if like the creation and redemption process is not seamless, and like for instance always possible, then like there's strictly speaking nothing that's going to be holding Tether to like pegging Tether to $1, and people often claim that redeeming is not possible, which is not true.
So, Sam, are you buying Tether using anything other than U.S. dollars? Are you using renminbi? Are you using other FX? Are you using commercial paper, securities, et cetera, to get those Tether onto your exchange or to buy it otherwise?
Yeah, so there's a few different things there. The only way that I'm aware one can create Tether, which is distinct from buying it on some level, but the way you create it is by just wiring the Tether people $1 and they send you back a Tether. And that's like just sort of all you can do. So when we're creating, that's all we're doing. As people know, Tether is like a huge part of the crypto markets in terms of like just by volume. Like there's a ton of crypto trades against Tether on like many major exchanges. And so when we're like trading Tether, we'll like maybe buy Tether by selling Bitcoin into Tether if it's trading at a level where that makes sense.
You're redeeming Tether. Who are you redeeming it from? Are you redeeming it from Tether or Bitfinex?
It's the Tether organization is who we're talking to.
Are you using U.S.-based banks such as Citibank when you wire to receive the Tether? Are you sending it through U.S. banks, or are you using anything other than Deltec?
Like the banks that we're using, or the banks that they're using?
Either or. I mean, are you using non-U.S. banks or are you using U.S. banks to purchase Tether?
Sorry, I'm not sure I'm following your question.
Are you using?
Oh no, Lawrence has gone frozen on. Oh wait, be back.
You say you wire money to Tether, right? To receive Tether. You wire dollars.
Yes, that's right. That's correct.
Okay. Is it? Are you using U.S. banks such as Citibank? Are you using? What bank are you using to wire the money to Tether?
I'm not. Alameda is not going to disclose the bank that it's using for its business in general.
Is it a U.S. bank?
Alameda is not going to disclose the bank that we're using. We're wiring U.S. dollars.
All right.
One can do this from a U.S. bank. Yes.
Have you ever bought crypto from Bitfinex?
Alameda does trade on Bitfinex. That's right.
All right. We've lost Lawrence, so we're going to have to wrap it there. But Sam, we appreciate you coming on to the show. And I know Tether has been a hot topic on crypto Twitter, so appreciate you for giving us a little transparency on that.
Of course.
All right, that was Alameda Research co-CEO Sam Trabucco. Coming up, a breakdown of Ethereum's London Hard Fork with ConsenSys, and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
From fueling local economies to connecting global markets, the future of money is taking shape now. Crypto State by CoinDesk will bridge communities of crypto investors, thought leaders, and developers to tell the global story of decentralized finance. Join us for this virtual event series as we make stops in Israel, Bahrain, and the United Arab Emirates to dive into the movements that are disrupting markets and changing communities. Register today.
Welcome Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hi, Nick. So, want to get an update from you on the infrastructure bill going through the Senate and what kind of amendments may have been made. The negotiations are going around the clock.
Yeah, so last night, Senator Rob Portman, who is widely believed to be the author of the crypto provision, sent out a tweet thread defending the provision as worded, said that he doesn't intend to capture miners or other non-broker, non-custodial entities. It's still unclear whether or not he intends to put this language in the bill itself, which is kind of like the big thing, right? It's what's the letter of the law versus what's the intent of the law. So I think we're waiting on that. We do know that Senators Ron Wyden, Pat Toomey, and Cynthia Lummis are working on an amendment that presumably would create some sort of clarity here, either narrowing the language or, modifying it in some other way to specify who gets covered and who isn't covered. And the amendment process is continuing. My understanding is that, we might see votes on the actual bill to, close the amendment process later in this week or possibly by the weekend. So we have maybe 2-3 more days to keep an eye out and see where things land.
Nick, what do you think was the most notable takeaway from Gensler's remarks?
So yesterday he said a lot of stuff about how the SEC is approaching this. He's got a number of priorities around crypto, but I'm not sure much of what he said was new exactly, right? He's been kind of beating this drumbeat on regulation and how he thinks the SEC could approach this for a couple months now, and his refrain is that Congress has to give him either specific definitions of what he can and cannot look at, or otherwise broaden his authority so that the SEC can tackle all the issues it wants to tackle. And he hinted at different things like ETF approvals, and said that he finds Bitcoin futures based ETFs more interesting and compelling than possible actual Bitcoin based ETFs. So that could be something to be keeping an eye out on. He said they're going to be looking at DeFi. He once again brought up this idea of stable value tokens backed by securities. So he's definitely thinking a lot about this, and I think we're going to have to wait and see what exactly comes out of Congress, or what his conversations with Congress lead to.
All right, Nick, we're going to
He's there saying that he can't do all of his he can't do in full regulation until Congress sets some of the at least some of the parameters. Is that your take as well?
That seems to be it. Yeah, I mean, he said this to Congress during some hearings in the last couple of months. So that kind of seems to be he's got this idea of what he thinks the regulation should look like, but he's not sure the SEC currently has all the authority he believes it needs to do so.
All right, Nick, thanks for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Some Ether bulls are enthusiastic about Ethereum's upcoming London Hard Fork, an upgrade initially expected to happen today that has been pushed to tomorrow. The upgrade aims to reduce transaction fee volatility and the network's net issuance of new Ether. Joining us now is Lex Sokolin, co-head of ConsenSys Global FinTech. Welcome, Lex. So prior to yesterday, Ether was on a 12-day winning streak, its longest ever, in anticipation of this London Hard Fork. Can you explain what this upgrade is all about?
Sure. There are a lot of technical things that are going into the upgrade, but kind of the thing that most people are excited about is the split of the transaction fee to kind of fund or put the transaction into the block from just a single auction mechanism to a mechanism that splits into a base fee and then into a tip fee for a miner. And so the net effect of that is supposed to be that transaction fees are more predictable. So if you've ever tried to buy something like a cat NFT or an avatar or make a DeFi trade, and then that didn't land because you didn't pay enough gas, that user experience would improve. And then the second part that's also kind of built into the logic is that the base fee is going to get burnt. And so there is there's kind of inherent built-in inflation in the protocol that rewards miners, and in the future will reward validators. And so now there's going to be a mechanism that takes some of that inflation off the table. Not all of it, but some of it.
So
Lex, how does
if I
this
understand
change
the hard fork correctly, what's going to happen is that these fees are going to become more predictable, but they're not necessarily going to become lower, right? I mean, that's been a big controversy about Ethereum lately, especially with the NFT boom, is that just gas fees are too high. The hard fork is not necessarily going to address that in the short term, right?
Yeah, I mean, software and capital markets and human nature are all, of course, in a soup when looking at Ethereum, but they're different things. So the reason that fees are high is because the demand for computation on Ethereum for block space tends to spike and is really high when people rush to buy NFTs or are really interested in some yield farming protocol or some particular use case. And so in that case, the supply of computation on block space is limited, demand goes up. And what happens very often is that within the transaction, there's even more capital markets stuff going on. So you'll have, arbitrage bots trying to bid against each other to make some sort of transaction, which drives the auction prices up and so on. And so, this is a market venue question. And what the upgrade is attempting to do is to create some mechanisms that dampen that kind of rush and that decrease, so it's more predictable for all the participants, whether it's miners or users and so on. I'd say the real change, if you want gas fees to meaningfully decrease, is going to be over time, either with ETH2 and the upgrades that are leading us that way, or it's with scaling solutions like Polygon, Arbitrum, and others that are already plugged into Ethereum that you can use and do transactions quite cheaply.
So Lex, how does this change what businesses you guys get into going forward, and how does it affect the portfolio of companies ConsenSys currently has? Are you doing anything? Are they doing any changes? Are you setting up coordination seminars with all your portfolios? So what's happening?
Yeah, so for ConsenSys, there are really three things that we do. The first is user enablement, so helping people access Web3, the decentralized web, DeFi, digital objects, and so on. And so we do that through MetaMask, which is now I think something like 9.5 million monthly average users. And MetaMask plugs into Ethereum, it plugs into Polygon, Binance Smart Chain, and all of the places where a Web3 economy has emerged. Whether you have this fork or not, whether you're using an L2 or a side chain or some other mechanism, end of the day, this stuff settles on Ethereum. That's where most of the trust is generated from the decentralization. And so for ConsenSys, kind of powering that through user experience is really key. The second thing that we do is developer enablement. So if you think about the iPhone App Store or the Alibaba ecosystem, if there are no applications, none of this stuff matters. And so you need entrepreneurs, you need builders, you need people to write decentralized software, to integrate it, to make it all work together. And so we offer a lot of tooling to help people do that. So again, as new networks plug into the Ethereum ecosystem, you have to create integrations and APIs and various software tools to do that. So it's not just the computation on Ethereum or on Polygon, but it's also things like Filecoin. How do you store your data? How do you think about identity? All of these things we're working to kind of plug together. And then finally, it's the kind of the institutional arm of the business, and the effort for all of us is to push along the CBDC narrative and the work there, the digital asset narrative. And so with things like Quorum, which is enterprise Ethereum, we're working with quite a few different governments and entities to kind of push the CBDC projects from POC to actual use.
So Lex, yesterday, Gary Gensler kind of made it sound like a lot more tokens might be classified as securities in the future. And I just wanted to hear your take on, is there any world in which Ether could be considered a security, and why or why not?
Oh boy, that's certainly beyond my pay grade in many different ways. I'm a simple advocate for financial technological innovation. I think for any global system, if we want to be adopted by the billions of people across the world, and that includes the U.S. and Europe and South America and the Philippines with Axie Infinity and the NFT games that are going on, as well as within China. If we want that footprint, which the internet has, and which is the goal for, I think, all of Web3, then we have to figure out a non-confrontational stance with governments and regulators, and find a path to coexisting. I mean,
Right.
I don't think there's a desire to destroy this innovation ecosystem, and in particular because I think there's actually like a geopolitical narrative behind Ethereum. If you look at all of DeFi and all the stablecoins, the $100 billion worth of stablecoins on ETH, that is all US dollar denominated. So I think there's actually quite a strong national interest and a dollar story behind these ecosystems.
Lex, we got to wrap up, but just one last question, if you could be brief. CoinDesk's Christine Kim has reported there were bugs on the testnet last week, specifically with Geth leading up to this London hard fork. And Geth is the most popular software used to connect to Ethereum. So I'm wondering, what are the greatest risks of this upgrade?
Yeah, absolutely. I think with any technology, there are going to be risks, and technologists are doing their best to mitigate them. There's an amazing amount of talent and testing going on. There are also multiple clients that you can use. Geth is fantastic, but you can use something like Besu, Hyperledger Besu, or other clients. And so I know that a lot of eyes are on this, I can't point to some particular financial or technological risk. I think this is just what it's like to develop the ecosystem.
Lex, we gotta leave it there, but thank you for joining us. That was ConsenSys Global FinTech co-head Lex Sokolin, and that's it for First Mover. Thank you, Emily Parker and Lewitinn. I'm your host, Christine Lay. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.